We understand Italy is an important economy to the Eurozone. They're trying harder to understand why what's happening there politically seems to be impacting stocks here and in the UK. What's your answer to that question?
Well, I mean, obviously Italy is a very different economy systemically and in size to Greece that you were mentioning a moment ago. And obviously the concern is that contagion inside the Eurozone carries on mounting. We're not looking for the Eurozone to break apart. We do think at some point there will be probably a policy response of some description, but it's just how bad does things get? Moreover, the other thing I would highlight in all this is that the banking sectors of economies like Italy, but also Spain and Portugal inside the Eurozone, have become much more entwined with their sovereigns. So in the first 4 months of this year, for example, Italian banks bought another 21.5 billion of government debt. So that's obviously exposing them to the sell-offs we're seeing in the bond markets, particularly at the shorter end of the curve. But this is a much bigger issue than Greece, as I was saying.
David, I'm sorry, did you say much bigger?
It's a much bigger issue than Greece, absolutely.
The economy is bigger, but is the potential contagion bigger than Greece? Because Greece was an issue that dominated headlines globally and political and economic turmoil for years.
Well, it didn't. I mean, the reason that Greece was backstopped was really the exposure of things like the German banking sector, the French banks and the UK banks to Greece. But Greece, in a sense, wasn't systemically as important as Italy, which is just so much larger. And obviously, in terms of the global economy, is so much more important. At the end of the day, as I was saying, I don't think we're looking here at a crisis. We're looking here at, spreads being very volatile, spreads widening out. Obviously, the market recognising that the banking sectors of some countries are very entwined with what's happening in Italy. And as you were mentioning a moment ago, the prospect is that we face further elections in in Italy, on the 29th of July. And remember that the ECB on the 26th of July has a key meeting when it was supposed to be telling the market exactly what it was going to do in terms of tapering later this year. So elections later in July would just throw more uncertainty into this mix.
Is Italy the same kind of potential contagion economically, David, as Greece was? Greece, as you noted very smartly, was tied to the German banks. People didn't worry about Greece. They worried about the solvency of the banks that had debt from Greece on the books. Is Italy a similar story?
No, it's much worse in a sense. If you had an Italian exit from the Eurozone, that would be worse than Greece. Obviously, the Greek issue came in 2000, in the early, just after the financial crisis. The concern then was that the ECB itself wasn't acting as a backstop. The market does know that at the moment the central bank is buying Italy, can continue buying Italy. There's this reinvestment point, which is very important. So, as I say, I don't want to worry your viewers out there in the US unduly. But at the end of the day, we are in very uncertain times. At the end of the day, there will be further backstop by policymakers. But this election risk at the end of July, the timing for the ECB isn't great. As I say, they've got a meeting just before when the Italians could well be going to the polls again.
The last couple of days, Italian bonds, government bonds, have fallen the most since Italy joined the Eurozone as a combined monetary union. What are you advising clients to do now with their money, given everything that you have just told us, David?
Well, luckily, I don't advise clients about what to do with their money. I just focus on the macro trends. But as I say, at the moment, we'd expect ongoing volatility, and there could well be further spread widening. And obviously, the banking sector is entwined in all this. So, I would expect the next few weeks to remain very, very volatile. But, as I say, we're not looking for a Eurozone breakup scenario. That's certainly not what we're looking at all. But it's just that we're going through this very volatile patch. Italy was always known as having issues. Political risk was always there. What we've also seen is substantial foreign buying of Italian paper over the last 12 months. And obviously, at the moment, that's now, I'm sure, going into reverse. At the end of the day, the Eurozone is still recovering. We had some pretty robust German labour market stats today. And ECB still wants to stop buying the bonds altogether, I'm sure, later this year. It's just whether it can.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.